Good morning, all. This is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Thursday, the 7th of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at ES. Now, we are actually seeing some promising signs. We might see some retracement today. This is a possible 60-minute sell signal brewing on NQ. We've got another one which is fixed, on ES. We've got another one which is fixed on NQ. We don't have one on RTY yet, but we would get one brewing if we saw a retest of this high. On YM, we have a 60-minute sell signal fixed as well. On DAX, nothing. On ESDX, nothing, although both of those have reached the bull flag targets now. So in terms of in terms of Nikkei, we've now got a possible 60-minute sell signal brewing there too. All right, I'm just going to go through those for you quickly, Doug. Possible 60-minute sell signal brewing on ES, and a 60-minute sell signal fixed on NQ, and a 60-minute sell signal fixed on YM, and a possible 60-minute sell signal fixed brewing on Nikkei. We are seeing some signs of a retracement here, and we're also getting pretty close to the overall target area, which means that this would be a good time to start backing and filling a bit, because I'm not really. This could go up a bit more. I did a post about it yesterday, but I'm thinking it's possible we could go as high as potentially 74.50 in the next couple of weeks. But I'm thinking there is both a strict time limit here, i.e. within 2 or 3 weeks, the oil market is going to start waking up to the fact that the strait is still closed, and there is still a vast gulf between oil supply and oil demand, and most of the reserves which are cushioning that blow are gone. A process of price discovery will begin. It's probably going to be brutal. We're going to see oil prices go up a lot. And what's that going to do to equity markets? Nothing good. So I'm really looking for a topping process here, and this is what I was looking for when a couple of weeks ago when I was talking about the lack of patterns on Qs and SPX was suggesting higher. This is what I was talking about. And last night, I was posting about the patterns that I'm seeing there now: solid support trend lines, channels, target areas. And this is what I like to see when we're getting to a high. This doesn't mean we have to have a high here, but I think overall, the odds look pretty damn good that we see one start to form very shortly, and that really we're likely only 2 or 3 weeks away from the market waking up to actually the fact that there's a real problem. We shall see how that goes, but in the short term, I'm wondering about retracement here. Let's have a look at those on the bigger picture. Looking at the charts I was posting yesterday. In terms of the SPX chart I posted a couple of weeks ago, we're now reaching the target area. In terms of the Qs chart I posted a couple of weeks ago, we're now reaching the target area. In terms of 15-minute charts on both of those, we've now got a rising channel established, and it's a beauty on SPX. And quite often these will turn into rising wedges, and I put in the 3 options I think are most likely, but this middle one is the one I really like, and that's actually up in about the 74.25 area. Looking at the Qs, I don't have a channel there, although I do have one on IWM. Doesn't really apply on Dia because actually we barely managed to retest the high, and we haven't even managed to retest the all-time high yet. But on Qs, I've got a nice looking support trend line here. I've got no channel, but of the 3 possible trend lines I marked in, this middle one is again my preferred one. Does it matter if we go over the trend lines on the weekly charts? No. These are patterns which are tolerant of overthrows, so an overthrow would be not unusual in the slightest. In terms of IWM, I've got a big target up here, which is in about the 291 area now, and this would be a channel resistance, but it's a currently very theoretical channel resistance. The real trend line, which is based on things we have already seen, although only a 2-touch trend line and not the highest probability, I've got now in about the 295, 296 area. We shall see how that goes. Short term there, we have another established channel, and it's nice. and we've got a nice looking potential wedge resistance level trend line, which is the very, very obvious short-term target. And this is in about the 289 area. We will see, but again, we could overthrow that. But that would be my preference. So we shall see. We've got some nice looking patterns. We've got some nice looking targets. This is what I was hoping to see. All right, am I seeing a significant retracement and then back up to current levels this year? Well, I'm thinking we can see a retracement today and then be back up to current levels within a couple of days, or two or three trading days, and then top out. I think the question is, the further out you go in analysis, the more the variables become tricky to call. I'm thinking we've got a pretty serious oil crisis forming here, and we may be making highs here that could last for a year or two. We could see a serious bear market. In fact, this is, in terms of the supply crunch, this seems to be more serious than the one we were seeing in the early 70s. Oil prices go up a lot, and at that stage, of course, is the market looking overvalued? Well, this is the chart of the day today. And this is the Schiller PE. And look where we are. This is the all-time high that was made in the tech bubble, and this is us here. That's about 44-ish. This is at 41.24. I don't think we're actually going to meet it on this run up in all probability, but we're pretty close to an all-time high. So obviously, yeah, equity is very overvalued. What happened last time we actually reached that high? The Schiller PE went down from 44 to 14. Just so. So in terms of the, we've also got the AI bubble bubbling under there, but the thing is, that is not a huge issue right now. The main issue, which is going to knock the market down over the next couple of months, is not the AI bubble. It's the oil crisis. In terms of this Buffett indicator, which is basically the relation of the size of the stock market to the economy, well, as you can see, we are at all-time highs there now already, and we have actually beaten the dot-com high, which only got up to about 150%. We're now at 207. Now, this isn't necessarily something, I mean, maybe this was always going to increase over time, but it's worrying. Everything is overvalued. We're in another tech bubble at the moment, but I don't think that's the problem right now. We will see. But I mean, I'm not thinking that they're looking like a 1929 high, which actually wasn't taken out until 1953. That was 24 years, and that's rather longer than the timescale I'm looking at here. But I am thinking we could certainly see a real bear market, a bear market of the kind we haven't seen since 2009. The bear markets we've been seeing since then have been 6-month jobs. I'm thinking, but more normally, it would last like a year or two, and I'm thinking we might see one of those here, but it's hard to say. I'm mainly looking at the immediate heights we made here. But one thing I was saying when I was talking about these trend lines here was that one thing that we'd seen in 2020 was we came and hit the main obvious bigger picture trend lines to make a main high, because that is where it's the obvious place to make a main high is. Now, it doesn't mean we're necessarily going to make one here, but the thrust of what I was saying there was if we were to make a really nice looking high that might last for quite a while, this is the sort of area we would go to. And obviously we are here. Doesn't mean we're going to see that here, but I'm thinking this is a high that could easily last the rest of the year and might last next year as well. It depends how it reacts from here, because the thing is, if we see a big decline from here and then the AI bubble bursts, well, obviously that could last a while. And there are signs of weakness in AI, and I think, frankly, much of the stuff they're building is just, frankly, it makes less sense than it did in the late 90s in the tech bubble. At least we actually used all that stuff later. I mean, all the vast amount of cable that were laid that was sold off at 5 cents on the dollar, they got used. They got used later, but the problem with data centers is that they've only gone alive for 5 years. You're not putting in infrastructure there. You're putting in basically something like a 5-year power station. If there's no demand for that power, then it's just a waste of money. There's no residual value to be had out of it, in the sense that we had out of a lot of the money that was spent in the tech boom. Anyway, so that's where we are on. Prices. Looking at the rest of those. Let's have a look at. Sorry, hang on 1 second. Okay, let's have a look at the ES chart, where we've still got an RSI 5 sell signal here. I'm not expecting this to go high enough, fast enough to take out this high on the RSI 5. I could be mistaken, but I'm not really expecting that. We are hitting the daily upper band, which is impressive work, but a good time to retrace. In terms of the SPX, same comment applies, and we've managed to hit the daily upper band. Our chances of hitting that actually was an ambitious move. Our chances of hitting the 3SD upper band at this stage would be, I think, remote. We'd need to go up another 150 handles in a short time. I don't think that's going to happen. In terms of the hourly chart, no current divergence. I would like to see a pullback and a retest to give some start setting up divergence on the hourly and daily charts. And I think there's a decent chance we're going to see that today or tomorrow. We've got a nice RSI 14 sell signal brewing here on the 15-minute. In terms of the Qs, we have a very nice RSI full size now, RSI 14 sell signal brewing. On Dia, we have an RSI 14 sell signal which has just about fixed. On IWM, I don't have those charts open, so bear with me a second. I'll just open those up. All right, hang on. Bear with me a second. All right, IWM, we've also got another RSI 14 buy signal, sell signal brewing. We've got some nice negative divergence in the short term. 5-minute sell signal fixed to the close on SPX. We've got 60-minute sell signals fixing. This is a good environment in which we will often see a retracement, even as crazy as this current market is. So we shall see. In terms of DAX, gone a little higher here, might be able to deliver a high retest, but I'm a bit doubtful. And Nikkei, we have kind of stalled a bit, but I don't think this is seeing yesterday's data yet, or at least it doesn't really look like it. Looking at the hourly. In terms of the daily charts here, we obviously reached the daily upper band. On SPX, we have reached the daily upper band on Qs. Frankly, and we reached it on Dia, although that was obviously an altogether less impressive thing. Dia's really been underperforming here, but Dia is getting closer to the retest of this high here at 503.07. The high was at 500.08. I would love to see that high retested, and I think there's a pretty good chance we will see that retested. Really, all this is looking for is this is the move I was looking for, and at this point, I would be expecting it to slow down, top, and then I'm thinking we're likely on the way down within another week or two. Because this oil crisis, ignoring it doesn't make it go away. And it's like this thing I was saying about the guy who jumped off the Empire State Building. You know, just because everything seems to be going okay when you're halfway down the building doesn't mean it's not going to be a problem. It's not the falling that kills you. It's always the landing. And at the moment we are falling and everyone's ignoring it. That's going to change. Or at least reading all the industry comment and all the well-informed comment, that seems highly likely to change. I don't often take a position which is as direct as this one, but that's because I think the evidence is very strongly in favor of it. All right, let's have a look at DX. DX is kicking around near these lows, and I'm wondering whether this double bottom target might actually have a shot. UUSD, wondering if we might possibly get to the IHS target in the 1.1875 area. GBP USD, no signals really on currencies at the moment. We've been seeing them elsewhere, and I'll talk about those. But we obviously, on USD JPY, we broke up from the double bottom, tested the monthly pivot, rejected very hard there. Not quite made it to the double top target in the 154.46 to 154.68 range, but I'm thinking it may well do that. USD CAD, maybe bottoming out here. Australian dollar, ruined my nice double top. NZ, ruined my nice double top. Not an awful lot to say on those. Now, ZB is more interesting because we've now got, on the bigger picture, I'm thinking we might be doing another leg up. to do an ABC up here into about the 115.30 area. But in the smaller picture, we've got a possible 60-minute sell signal brewing there as well. Pretty much the same as ZN, except we haven't got the sell signal brewing. Brent is looking at this price, because this tends to have a bit of a lag. But actually, let's see if we can fix that right now. Wait a second. All right. This should clear it. All right. You can see we're pretty much getting to the target here. So we shall see. I'm basically calling this double top, I think, although we may make it down to the full target there. However, what has changed here from when I was capping it earlier is this now has a possible 60-minute buy signal brewing. I'm thinking that we're likely to see equities go down, oil go up, bonds go down, and so on. And we've also got some interesting looking stuff on precious metals. CL coming in close to a retest of yesterday's lows. Yesterday, actually, the oil move was genuinely insane. The problem with oil prices here is that the Strait of Hormuz is closed. It's not the Iran war. It's but that the Strait of Hormuz is closed. It's now been closed for 71 days. Which is a long time. Particularly, I've been reading stats that basically for every day it is closed, it's likely to take 5 days longer before it gets back to normal. That would currently put getting back to normal somewhere in 2027. If we actually blockade Iran for the next 8 or 9 weeks, as the administration is talking about, that could put recovery back to normal, back into summer 2029. So we shall see. But the idea that the Strait definitely being blocked for another 3 weeks would send prices down 10% was just genuinely deranged. But HO is coming close to retest yesterday's lows. RBOB close to a retest of yesterday's lows. NG not the same, because I don't think it's really affected by the Strait. I think we might be heading back into a retest of the lows here as well. Let's have a look at GC. Now GC is looking interesting because we've been seeing a bit of a move up with equities. This is not the correlation I would like to see when we start seeing a big decline, but we've got time to reverse that. But we've now got possible 60-minute sell signal brewing. This is kind of matching what we're seeing on equities. And on silver, we have a possible 60-minute sell signal brewing. On palladium, we have a weak 60-minute sell signal fixed. On platinum, we've got a 60-minute sell signal fixed. And on HG, we've got a possible 60-minute sell signal brewing. These are across the board, and these are supporting the sell signals that we are seeing on the equity charts. So I am liking a retracement here. All the signals in the world won't necessarily get you a retracement, but it certainly increases the odds a lot, and I'm liking this. And actually, I've got a target for it. What I would ideally love to see here is, hang on, let's go over to the SPX chart. You see this this high here, and then the gap through the high. Yeah, I would like to see one of two targets here. I would like to see this get back into about the 72, 75 area to basically backtest the top of this gap, or I would like it to fill the gap, which would be down to about the 72.59 area. That's what I would love to see on this retracement. Not necessarily going to get it, but that would be the obvious target area. All right, looking at the rest, KC is looking as though it might be about to start breakdown from this bearish consolidation. Stroke triangle, stroke flag. SB, we are rallying a bit at the monthly pivot. If we can hold the monthly pivot, we've got a chance of going higher, but obviously it's got to hold. As it is, we've given back a lot of this move up already. That could just be a bullish retracement. CC, we had some negative divergence here. We've lost that. Normally, and I should have done this here really, but it's really been a very busy couple of days. I would draw an arrow here, which would be basically from the point the flag broke out to the bottom of the flag, i.e. the start of the flag. Bear with me a moment, that would get us down to about here. And then I would draw in a target for the flag, because I think this is a breakup for the flag. That actually has a target too, and that is the target. Hang on. Which is in about the 4700 area. So I'm thinking it's probably going to head there. CT, we've got possible pullback coming in CT and the grains. We will see. Possible little level top here. Lumber, wondering if it's going to resume the uptrend. Honestly, at this stage, I'm wondering if it'll ever move again, but it usually does. It's been very, very, very subdued lately. ZW, this could be a bull flag forming. On corn, this could be a bull flag forming, although it's a little vertical. So we've got a 60-minute buy signal fixed here. On soy, we've got a weak 60-minute buy signal brewing. I don't think we had one on. If we retest this low, we would get a possible buy signal brewing on soy as well. ZL, we've got a possible 60-minute buy signal brewing. We've been seeing a little bit of pullback. I'm thinking these might reverse back up, but I do have some daily sell signals and divergences. Live cattle, I think this is probably on the way. This could be an ABC, but I'm thinking we're probably heading back to the high. And HE, we have a nice looking double bottom, and I would like to see that play out and break up. All right, great. Okay, haven't got any more questions. I'm planning to do a post on oil today. I'm actually trying hard. I think I had a comment from someone a couple of weeks ago about not having Trump deranged syndrome. I haven't got Trump derangement syndrome. Trump has Trump derangement syndrome. He's deranged. And it might just be an excess of stupidity. But I mean, the problem is, it's very hard to be polite, particularly about what he's done with tariffs, what he's done with the war. Economically, he's a duffer. And he said it himself. He said, bright people, smart people hate me. I don't hate him. I don't respect him, though. I don't think his opinions are worth anything. And it's very, very hard to be polite with him about this crisis because he's been a total idiot. And he lies about everything. And someone was saying, how can you be objective if you're going to be so anti-Trump? And the thing is, actually, it's hard to say anything nice about Trump and be objective. Anyway, so we shall see. I'm going to be loading more implicit criticism on him today in my old voice, but it's very hard not to. And honestly, I thought he was an idiot for years. If I had any doubts about it, they were, when he responded to the COVID crisis, which was a total disaster. He did almost everything wrong. And I was joking after the crash that I didn't think the search for intelligent life on Earth was going very well. Well, sometimes I wonder about that still. All right, great. In that case, I think that's a wrap. Everyone take care. I'll catch you guys tomorrow, and cheers.